Hi everyone, welcome to May 2024 St Albans Property Meet. We're in the heart of St Albans on St Peter Street, if anyone knows where that is. And we're ready for the event and all the fun that comes with it. We'll be speaking to some entrepreneurs inside and giving you their insights on unlocking financial freedom. You know we love the journey. Thank you so much. Hi everyone at the St Albans Property Meet, and we've got Kuldeep here. Kuldeep.
Hi Z, nice to meet you.
Perfect. And he's going to give us some insights. So I'm making my understanding you're making that transition in the process at the moment to get into investing in property.
Yes, I am, yeah.
And what is your property strategy so people know what we're talking about?
Okay, so I have to look at what's good for me and my family and how much time I have. So right now I don't have much time, so I've been thinking very hard what I want to do, and I see speaking to a lot of people, and the kind of business I do as a bridging lender, I see a lot of different deals, a lot of different strategies. So the strategy that worked for me and my lifestyle and my family would be buying a house that has about 3 flats, all in one title. So what I'll do a title split, add more value. For example, if the house is worth 320, I spend 50k on it. I plus all costs, etc. Say it's worth about 405,000 pounds, let's say. And say each flat's worth 180, that makes it 560. 75% LTV, that's 405. I get all my money out, and I'll be able to recycle that money and go again. But each flat, say I rented out for £1,000.
Let me unpack that. You said a lot of value, and I know there's a few questions on this. So the first thing is when you do it,
Yes.
right? One of the most important things is that you never mentioned something called tax.
Yes.
Right? If you don't structure this in the right way,
Yeah.
you're just going to get hammered on the changes.
Yes.
Because what will happen is when you go to your lawyer and you've got a freehold, that's what you're buying,
Yeah.
and you're going to split them into leaseholds. That may change the wording going forward, how that is. What will happen is they won't allow you to do it in a separate entity. In the same entry, they will expect separate entities.
Yeah.
And if you don't structure that, you'll get triggering stamp duty land tax. Right? You're talking probably corporation tax.
Yeah.
Because on the gain.
Yeah.
Right? This is going to be painful. Also, another benefit a lot of people don't realize is there's a potential VAT benefit. Because when you someone does the work,
Yeah.
and because you're changing from one entity to multiple,
Yeah.
the VAT is different.
Okay.
It's not 20%. It can be potentially 5%. You need a valuation. So that is the bit that you need to think once you've got an idea and get the advice that tailors that
Yeah.
to do the step. Then you're working on to the step. Next step is about refinancing.
Yeah, exactly. So from my background in refinance, so interest rate is about 5% right now. I know they've gone up a little bit
Yeah,
now.
That's it. So May 24, time flies.
Yeah, so so say example is 5%, interest will be about £1,800 to 2,000.
Yeah.
Say each flat's worth £1,000 rental, that's about 1,000 to 1,200 left.
Yeah.
Say I'll get, after all costs and taxation, say it's £500 in my pocket. I don't really need that money because I've got my own 9-to-5 job to pay for my family's ways. But what I've got is all my money out. I've got cash flow coming in that I can keep for a rainy day, and I can go again, and hopefully that worked for me.
I think one of the key things a lot of entrepreneurs in property, especially or running businesses, they don't realize that you've got to set targets, which you've just done.
Yeah.
I would personally, if I was doing these in the modern day, I would try to get minimum £500 cash flow, net cash flow.
Yeah.
The reason why I say that is people don't think 10 years. They think every year.
Rental, but rental increase is higher than inflation, in my opinion.
It is, but what I'm thinking about is when I do a property, I've done the refurb, I
Yeah.
spent the money, what happens? It deteriorates.
Yeah.
How are you going to pay for that?
Exactly. That's
And
why
that's
that
why
money.
the cash flow has to be more than what it's going to cost to refurb it in 10 years, right? So you put capital appreciation to one side,
Yeah.
you get it great,
Yeah.
right? But you're going to manage the cash flow,
Yeah.
because if it cash flows
Exactly.
and you can get money out,
Yeah.
then you can go again. But you got not problem, you got assets. Assets are only worth it if they're putting money in your pocket. If they're not putting money in your pocket, they're not assets.
Yeah, exactly.
And I think this is where you probably see a lot from the financing world.
Yeah, so obviously work for a bridging lender, so I see that a lot of different inquiries, a lot of different strategies. So for this, for my family, it makes sense because it's less time. So I'm looking at doing AS, normal single lets for each flat, not like a HMO or AS. So I don't have that time.
Got it.
So for me, it makes more sense to do something like this compared to other strategies like doing developments, even though...
Let me unpack that because you give so much value. The audience will be like, this Kuldeep's gives too much value, we're missing it. That what he's talking about is whether you do nightly rentals or longer term. They call them ASD, and ASD means normally 6 months or more is a long-term let.
Yeah.
And that's the difference because the tax changes as well, by the way, by doing them differently as we speak at this moment in time. And you're looking less hassle, you can do it more passive, that's why you're doing long term.
Yes.
And because the numbers stack up, that's a viable strategy.
Yeah, exactly, because like you said, I've got cash flow that builds up in a pot, and that'd be the money I don't need to do. So I've got cash flow happening already with my income and my wife's income, so that's not fine. It's just having that asset, plus I can go again by recycling the money, plus I have the cash flow. And for example, if I've got 3 flats, say one flat's not paying me, I've still got 2 flats paying the rental, but that'd be 2,000. So
you diversified your risk.
Yeah, exactly, and that's just on one purchase.
Of course.
So imagine if I could carry doing that again and again and again. So that's one main thing I'm looking at right now.
I think that's a great strategy. We call it the Brewer strategy, right? That's what you're doing.
Yeah, but I don't think the normal Brewer strategy works.
Depends on the numbers.
Yeah, but what you buy it for. But I think it's much more harder. I think they're like golden nuggets. I mean, for me, if I get 80 to 100% of my money out, I'm happy. So I think it's quite hard to get 100% of your money out because I've got money coming in that I'm saving. I still can go again much more shorter period of time if I got all my money out or some of my money out.
A couple of things to think about also is how you put the money in.
Yeah.
That's really important, how you put it. Secondly, you talked about children. And we love legacy, and I go on about this a lot. Legacy is important.
Yeah.
The big issue is inheritance tax.
Exactly.
Because this is all part of your estate. And I was talking to you before, the solution is something called a family investment company.
Yeah.
And you've got to think about, because that's an investment. And if you do it once, and you set the structure, you don't have to do it again.
Yeah.
And the savings, just to let everyone know, right, if you go over, husband and wife, over £1 million, you're going to be paying 40%. I'm assuming your £1 million is covering your main house, your main residence. Yeah. So that's a bit painful, isn't it?
It would be, yeah.
So if you do it wisely, you can actually save that pain. And you've got twins, you said?
Yes, I'm blessed with twins.
Amazing. Boys or girls?
2 girls.
2 girls?
Yeah.
We always say that's a lot of pressure on him now.
Yeah, well, I'm a twin myself.
Right?
I'm a twin myself.
Oh, wow.
Yeah, so...
Identical twin?
No, my girls are not identical as well.
Right, they're not identical.
No.
I've got cousins that are not identical, but they're twins. Yeah. And it's always crazy because one of them is really built and the other one is really skinny. And when I go up there, you see the difference. But you have a special relationship, don't you, with your twins?
Yeah. It's a different relationship you have, but very fortunate, very blessed to have.
Do you know what? I was thinking I might see another Kuldeep look around. I'll be going, oh, Kuldeep, the other thing. The person will be looking at me like, what's this guy talking about? He's never met me. But Kuldeep, you've added so much value to the journey. Is there anything that you would want from the social media family, how you help them? Because obviously you're looking for deals, you do see deals.
So if you're a deal sourcer, please contact me. I am looking, and also I do work for a privately funded bridging lender called Info Finance. So if you're looking for a bridging loan, you want to be quick, you want to be fast and flexible. Also, we take views on any hurdles that you might have. So we're pure asset based. So any issues you might have, right now unfortunately, we have seen a lot of deals that are in receivership administration. Right now we've got a portfolio that's in administration, we're looking to help and refinance them out, and so the broker, after done the bridge, was able to refinance them out.
Okay.
So we can help if you need that help. So
Kuldeep, as he's doing, he's putting a lot of value. He can help you with problems and hopefully potentially help you with a solution. So we'll put his link in the post that we'll be doing on this, so you can contact him directly because he's big on LinkedIn as well. I think you spend a bit of time on that, and across all the social media. Kuldeep, thank you so much.
Thank you very much for your
time.
No problem. Thank you.
Hi everyone, we got the Talk the Expert this week, or Talk the Expert in the corner this week. Ben, nice to meet you.
Yeah, likewise.
Ben is a specialist architect for property developers, and he's going to give us a bit of insight. Ben,
sure.
I want to ask you one of the big things. what's the biggest headaches you get from clients as an architect for property developers?
So from clients, actually, it's normally a bit of a breeze. It's the planning officers that cause us
Right.
issues. That's the bane of my existence. The planning process is completely failing us. It's causing delays. It's causing me as a developer huge amounts of additional money to ride the waves of delays that they want to throw on us.
Just to unpack that, because it's
Yeah.
such a big area. Is it because they're new builds and they're taking a lot longer, or
No,
which ones are causing you
a lot
big
of the
problems?
things that we do are conversions, new builds, HMOs.
Commercial resi conversions?
Yeah, but they're all taking a long time. It's not just one specific thing. The planning departments are hugely under-resourced. They don't have enough manpower to actually deliver on their promises. Things are meant to be delivered in 8 weeks. I can't remember the last time I had a planning application that was decided in 8 weeks. So it's just a constant battle, kind of banging your head against a brick wall. But
I think you put the nutshell, because that's why a lot of people invest knowledge in permitted development and use PD rights.
we do a lot of PD stuff. That's great. 56 days. There you go. You get it. That is a great tool, but everyone's looking for that. So finding good opportunities is really difficult, and we have a lot of clients that are out there looking for good PD opportunities. But
Do you feel the changes in PD, sorry to cut you off, the PDs have helped you because now you can
Massively.
do bigger sizes?
Yeah, huge.
And now I'm seeing, because we have people like we advise and people like Ranjam in my head of
Yeah,
Sharon,
yeah.
John Howard, and they're doing some big scale, and they've had restrictions on what they could do before.
Until
now. And a lot more advanced entrepreneurs in property development who've done the smaller stuff
Yeah.
and they want to do the bigger stuff. Now it's huge opportunities.
yeah, huge. So we've got a 20-unit office conversion in Tame, not too far from here.
Yeah.
We, with the latest changes that came in a couple of months ago, where they removed the size limit and also removed the need to have 3 months vacancy on commercial aspects, has opened the door for us massively. We're bringing our timeline build program forward by 6 months because we can get planning applications in sooner. We don't have to kick tenants out to then have it vacant for 3 months. It's really sped up things.
So
and
do you still need to do, you obviously wouldn't have to do the planning in that sense, you would do PD, but it's just making sure the designs stack up.
So
Is
from an
that-
architectural perspective, so it's probably worth saying I have two hats.
Right.
My architectural practice, or architecture and interiors, is something that's been running for 7 years. Got 15 people in Clapham in London that work in the team.
Amazing.
And XP Property is my development business, and that is, has delivered and transacted on £80 million worth of property over the last 8 years. We've got a
Amazing.
pipeline of 65 units, about
Wow.
30 million pounds in GDV at the moment across 5 sites.
And what's
So
your
we're pretty
GDV?
active.
Yeah, that's amazing. Shows you this gentleman, why he's an expert in his area. What I wanted to ask is, if you got on your GDV, what is the ratios? Because GDV is gross development value, what the value at the end. Some of the audience who may not understand that. I wanted to understand what percentage of GDV do you evaluate deals on
So we'll want at least a 20% profit margin on GDV after finance.
after finance?
So yeah, taking into account all of the development costs.
Before tax, but after finance.
Before tax, after finance.
20%, is that
on
that
GDV.
low?
Not really. We can make projects work at that. Ideally, any project that we do, we'd love it to be more than that. And we've got 2 years ago we won property deal of the year, the Property Investor Awards.
Wow.
That was for a site that we've literally refinanced in the last month. Just the figures on that one, we bought it for 1.5 million. We spent 450 grand doing it up, and it's been refinanced at 3.4 million pounds. So
Wow.
huge uplift, about 1.2 million pounds worth of profit in that.
Have you held it? Have you
We've
held-
held that. We've
So it's a buy and
refinanced.
hold.
Yeah,
Right.
we've got about 190 grand's worth of rent roll coming in on that one. 14 flats in Oxfordshire. So those are the types of deals that, yeah, absolutely, we would love to be doing those day in, day out. That's property deal of the year. They don't come along all of the time. So, 20% margin on GDV. We're happy to work on schemes like that. That'll get funded. Lenders will typically go down to 15% margin on GDV and still lend at that level. Obviously, that becomes a lot more risky. And we would love to be, doing schemes that are as big a margin as we possibly can, but they're not always easy to find.
Huge value there. He's unpacked. He's doing a lot of different ones. One of the biggest things that people, as I mentioned, is the main issue is the tax side.
Yes.
And then you have to just know what you're doing at the beginning, because property developers and investors are different. I was speaking to Ben off air, and he sort of understood that, is that developments have total different rules and to investors, because that last one, when you buy and hold, you're a property investor.
Yep.
Even if you're doing
And it's
development
the intent,
instead.
right? It's the
Yeah.
intent of what you set out on.
Not just
on the
intent, it's how
project.
it's treated. So the intent is shown on how it's treated, because if you change in the middle of the project, you trigger a dry tax charge, and most specialists who are not in property, they don't understand that. That is quite nasty,
Yeah.
right? And are you intending to sell? Right, because there's special rules post 2008.
Yeah.
So you need to understand that from the beginning and then do it, because you'll have corporation tax headaches if you're in a group structure, and you'll have something called VAT headaches because they start
VAT
clawing.
is mind-blowing.
Oh my! One of the areas that I keep on telling people is so important, and you need to be able to engage people who understand that, because as more it gets complex, you may need some unique specialist advice on your scenario. VAT.
I've had it explained to me so many times on each of my projects. I still have no idea what I'm doing. Like, that's why we bring in specialists, because it baffles me.
But it's so big.
Yeah.
And I say to people, you get all of this right, the benefits are huge. Because it goes back to us saying before, most people are losing money.
Yeah.
They don't even know it.
And you need to know early, right? Before you even purchase the property, you need to know how you're treating it. VAT,
you need
structure.
to know the acquisition, right? So stamp duty, all the rest of the stuff, right? The journey, and the exit, whatever that is. If that's hold or sale.
Yeah.
You need to know all of that and then structure accordingly, because the answer changes.
Yeah.
And also, you talked about financing. I don't know if you use suspensions at all, right?
We have some SaaS investment in our business, yeah.
Right. Do you do loan backs?
We have SaaS investors work with us in our projects. We
got
don't
your
have
own?
SaaS investment yet.
God,
Yeah.
I would do that as a
Yeah.
number one, because ultimately what you're doing is you're actually investing in your future, and you're cutting finance costs because you become the bank.
Yeah.
If you know how to use it.
We absolutely want to be doing that going forward. So we haven't learned enough about it. We only know some of the things that are possible by the investors that invest with their suspension with us, but we haven't explored it
I've got an
ourselves yet.
acceleration for you. I know you're going to be on Sky soon.
Yeah.
I did a Sky TV episode, just so I saw
Okay,
that.
nice.
Watch it, it's on YouTube.
Sure.
Also, we've got guides on it. And the reason being is there's so much.
Yeah.
And then you need someone to help put the strategy, the holistical strategy, across all the different facets. And one of them has got to be how you utilize your pensions, right?
Nice.
Because that's one of the biggest areas that you can benefit huge.
Yeah.
Leverage, understanding how property works, and also you got a specialism around architecture and how you helping. How have you found how have you found entrepreneurs, and the key questions they've been asking you as being the expert in the corner today?
Yeah, I mean, I'd love to be fielding more questions, to be honest, but I've just been generally having a big chinwag with most of the people here. Like, there's a few familiar faces. It is an amazing event. It's always packed like it is tonight, and if I can give some value in any field that I work in, then I'm happy.
I think it's really important. And do you know what? Ben, like myself, is privileged that we're professional services, and one of the things is how do you help people on their journey? And it's really hard because our time is always taken up by a lot of different things, and when you have these events, I love them because I speak to entrepreneurs, fellow professionals, and we're giving information and value which probably people would not get normally, or they would have to pay so much to get, but they don't understand always why it's relevant. And it's such a huge thing.
It's really difficult as well. I think people go into property investment thinking, they'll make a quick buck, or they see homes under the hammer and they think, oh, this is easy, everyone makes money. But the reality is it's really tough. Business is tough, property development is tough, and if we can give back a little bit and help people out on the way, then happy days. On that note, we actually, myself and my business partner, every Friday at 5 p.m, we run a live broadcast on YouTube.
Wow.
We package that up into a podcast. It's called the Property Experts Show.
Wow, okay.
XP Experts, because our property company is called XP Property. And with that, we just give back kind of 8 to 10 things that we've learned in the week,
Wow.
lessons that we've learned, issues that we've faced and how we've overcome them, conversations with our tax specialists, our accountants, our planning consultants, so all of the projects that we're working on, just to share some of the value that we've learned in the week. So
Wow.
yeah, do tune into that if you want to get some value from it.
On that point, we'll put Ben, obviously tag him in, or assume on LinkedIn, and request for social media, will tag you in, and he can comment and like, and you can follow him, and it sounds like he'll give you huge value, and it's all about knowledge. Invest in knowledge, invest in knowledge, and invest in knowledge. Thank you, Ben, so
Nice
much.
one.
I really
Thank
appreciate
you.
it.
Cheers.
Thank you. Hi everyone, I've got Sharon at the Albans property. She's quite well known. She's a bit of an author of a famous book that I'm hearing about. Sharon, nice meeting you.
Nice to meet you too.
I'm going to ask you a bit about this because obviously we're dealing with a lot of entrepreneurs, right?
Yep.
And one of the things, auctions, which is a bit scary.
It is.
You've obviously demystified this whole journey
I have.
and even wrote a book.
Yep.
Can you just tell the audience how you help people by reading the book or understanding
Yep.
the book, understand how to buy from auctions?
So the book is all about my own journey. There's no fluffiness in it. It's exactly what I did, which was I bought my first property at auction, I did it up, rented it out really quickly, added value, got it at a good price, and then I tried to replicate that again. But I spent 6 months travelling about, looking at properties, doing viewings, researching, reading all the legal packs, and then you'd go along to London and the property sold for double, or it got withdrawn, or the reserve price was ridiculous.
I'll just unpack that for the audience. What you said, the huge value, so many people get frustrated on that.
Yeah.
And you're probably watching this, you're like, that's me!
Yeah.
Because the entrepreneurs are trying to find it, but they're going to the general market, which is always inflated.
Yeah.
Because people don't know how to value properties, they only value it by the asking price.
Yeah.
And if they got cash and they want the house, they always go higher.
Exactly.
So you need to go somewhere where there's motivated sellers, or a way to get that
Yeah.
property at the below market value, because
Yeah.
otherwise there's no point
Exactly.
to invest, is
People
there?
are like going along to the auction and getting carried away, thinking, well, if they're going to pay 120, I'll pay 125, and then before you know it, you've walked away and you've paid far more than you thought.
How do you make that decision? What the number? How do you set it? So people watching, they're going to auction, they're trying to get the property, they read your book. How
Yeah.
do you get that price, and where do you stop?
Well, it's all done for you because, so I then looked at places that hadn't sold after the auction, and I saw a flat in Bristol. I was like, that looks really nice. I know Bristol's not a bad area. It's really come up since then. It was being rented out, and I could see that it was way below market price. It was up for 75 guide the month before, then 65. It hadn't sold, and then it was up. It was available for 54,000 because they were desperate to get their money.
So that was the reason why they're motivated, because most people would get scared. Why is this price dropping? Is there something wrong with it?
Exactly.
And the legal. How did you evaluate whether it was more than knowledge? How did you do that?
Well, obviously, Rightmove, you can see what a property's worth, and then through other searches, I could see who had been rented out with previously. In the legal pack, I could see who was rented out with currently. I then went on, did searches, see what the crime rate was like, phoned up some more agencies to see how much demand there was for that, what they thought the property was worth, and a couple of the agents have said, we've seen that property, we think it's worth about 85,000, which isn't a huge amount, but when you're only paying 54,000, and this was like 10 years ago.
Wow.
And it was being rented out. I knew the tenant was good in there because you couldn't speak to the agents. So it was just sort of like, why be scared? Because I know that it's below market value. I know it's a really good rental prospect. And so I just replicated that a few times. And then people kept asking me how I
you
did
do
it.
How
And
you
I
do
said, I write a book then.
So for the audience, I want to unpack that. Sharon's given huge value. So what's the book? Just
How to Net a Property Auction, Bargain in an Hour by,
Are you-
by
are you-
Sharon Kind. It's on the Amazon. It's on Amazon Kindle.
perfect. And are you on LinkedIn? So
I am.
we'll tag you in so you can then comment on that and give that. And secondly, I think you've broken down where the auction and the pre-research that you've got to do. I think she's probably missed the legal pack, which she probably analysed a lot.
Yeah, because you've got enough time then, because you know what's available
Yeah.
after the auction. You can look at them all. Whereas
You can do- you're not
before you go to the auction, you've got to read a load. You might have to pay a solicitor to read them. At least you've broken it down to what you can afford and what's available, and then you've got a bit more time to do all that other stuff.
So in a nutshell, the strategy is look at the properties that didn't sell auction, right? Do the research there. You'll then got a motivated seller because they need someone,
Yeah.
right? Then your legal costs that you may do for a legal review
Yeah.
are worth it because you're not competing with anybody.
And also, quite often you'll get it lower than the reserve because they might have set a reserve of 100,000. It's not sold, and all of a sudden they're panicking, and they might let it go for 90 after the auction because they just want to get shot. Not because there's something wrong with the property. They might have something else they want to invest in. There's a number of reasons. Obviously, some don't sell because they are problematic, but you do enough research.
I think you're then focusing your research because a lot of people, as you said earlier, they get, oh, this is too much. They give
Yeah.
up because it's overwhelmed because they're going loads of deals, but they're never noticing if the person's motivated and what
Yeah.
the market's going to say.
Especially if you've got to take time off work, because if it's your part-time career, you've got to take time off work to view houses, to go to the auction centre, to register, maybe pay a solicitor to look at an equal pack, and then it gets withdrawn the day of the auction, or the reserve is ridiculously high, or it's just attracted a lot of interest in the room.
I think you've added huge value. You've given people insight. Auctions are a bit scary for a lot of people,
Yeah.
but they can actually be huge. Got to read the book. I think I might be getting it.
Yeah.
Right. Also, I want to finish on. You also help people financing as well. Is that right? Is that one of your day jobs?
It is, yeah. So yeah, helping finance, bridging, commercial stuff.
Which
buy-to-lets.
area are you finding that is quite big because financing is so huge? So is there a certain type of property entrepreneur that's coming to you a lot?
The buy-to-let market is cooled down a lot.
Yeah.
People want to HMOs. People still want to. There's some cheap properties coming on the market where people want to do them up and sell them on. So there's still there's the same as there's always been. But say the buy-to-let, certainly down the southeast where it's so expensive. But it's still. So you can still look at the auctions, see properties that are rented out for maybe like a 12-13% yield that are available afterwards. So
that's amazing.
Yeah, it's good.
Do you know what? Sharon has given so much value. I hope you enjoy it. She also commented on the post, and she's given insight on a different strategy, which I don't think is used that much, and something that you can get huge profit. And you built your whole property portfolio this way, or most of it.
So I wrote the book, and I was just so surprised at how many great reviews I got.
Wow.
You know, totally. As much as I like doing finance, when you see a really good 5-star review on your book come on the website, which I'm not, I have not really marketed the book, it's just been found.
How many have you sold, if you don't mind me asking?
It's got about 87 reviews.
87
I don't know.
You don't know the number of how many sold copies?
I think about a couple of thousand.
That's still amazing because it's a very niche area.
And I self-published
I think you're doing yourselves.
Yeah, I self-published it, so it was just. I really enjoyed writing it. It's a bit about my background. I haven't got rich parents, haven't got money to fall back on. I had to be really, really careful. So, I didn't sort of have a big pool of money, and so I had to make sure that whatever I did worked.
I think what you've done is you've added value to people's journey, and whenever you add value, people appreciate it, and that's where wealth and all the rest is created, because you help others. That's how it comes back to you. So
and
I think you've done really well.
As well, because it's not like selling courses, it's just literally what I've done.
And it's actionable advice, isn't it?
Yeah, it's not. I haven't written a book to sell this and sell that. It's just literally what I've done and how I've done it.
I think it's going to be amazing. And as I said, Sharon will put the comments in and all the rest of it, so you can then, if you want to learn from her journey, this is what it's all about. How you unlock financial freedom is learning from other people's journey, taking their golden nuggets, learning, implementing, and I think you'll get a huge amount. Thank you so much, Sharon. Oh, before I forget, we've got a special guest. Who's this?
This is Ollie, my Labradoodle.
So this is Ollie. By the way, we're the only dog-friendly property networking group. So if you want to bring your dog,
she's definitely got excited.
This is Ollie.
So I think the audience are going to love. We've got Holly, Sharon, Craig, and myself, and she's loving it. We obviously got one of the main people, Julie. Thank you for being such a great host as always, and all the great entrepreneurs that you're helping, introducing. What's the next one going to be? Because we're wrapping up May, say Albans Property Meet, and the next one is June, as she reminded me. I was skipping to July already. So it's June the 6th, the next one, the first Thursday of the month?
Absolutely, so it's 6th of June, first Thursday of the month, but this one is a little bit special because it's going to be our 14-year anniversary.
Wow.
So I'm going to have to do something special. I'm going to have to pull something out of the bag. Our expert in the corner for that event is going to be a lad called Cash, and he's going to be talking about bridging finance, which I know is a huge thing in the market at the moment, and lots of people are interested in that topic. So if you're interested in bridging finance, or if you just want to come along and find out what this event is all about, please come along on the 6th of June and join us here.
Love it. And do you know what? I'm being honest with you, one of my favourite events because it's so relaxed and you get a chance to speak to people in a nice environment, and you have the great hosts like Julie and Craig who try to make everyone feel welcome and introduce each other, which is a difference maker. So I hope you enjoyed all the content. Please do like and comment below. Thank you for the journey. Really appreciate it.